Alright, welcome to the last video of this module. I believe it's section 8/2. I think I'm correct on that. Anyway, in this particular one, we're looking at calculating credit card interest. And if you're like me, you have a credit card because you have to live. And if you're like me, you absolutely hate the stupid things. Alright, well anyway, that's enough of that little rant. So, there's a couple of things that we can do to end up calculating credit card interest. In other words, another term that we use is what you'll hear, finance charge. Finance charges are what kill you when you have taken a loan out or you have got a credit card. If you are not keeping up with your bills, your finance charges are going to kill you. I'll give you a case in point. When I was probably about 20 years old, I went to Best Buy and got a credit card. And I went and bought a video game for $60. And then I also bought some other video game equipment. I think it ended up about altogether, I think it was around $50. So altogether I spent about $110, okay, on my very first credit card. But I didn't keep up with payments, and then I was making the very minimum payment and just here and there, and I was like, this is fine. And then after a little while, I had paid on it for maybe about a year, and I'm like, what in the world am I doing? I have already paid $110 to these people, but all I did was pay the finance charges. I never paid anything, so I actually just quit paying my credit card bill. About a couple of years later, I had forgot about the credit card, to be honest with you. About a couple of years later, I get a phone call from a collection agency saying that I owed them about $1,200. So my purchase of $110, I just stopped paying on it because I was a stupid 18-year-old kid, ended up being about $1,200. It cost me, I can't get over this, it still makes me mad to this day, it cost me $1,200 to buy one Super Mario Sunshine video game. That's what it cost me, and I'm still mad at this day. I paid it off, I got it fixed up, but if I knew then what I knew now, I probably wouldn't have done that, and if I did do that, I'd have kept up with my payments. Now, that's enough of my little story. Some of you probably have worse stories than that. Hopefully, it's not too bad. Alright, moving on. So, calculating credit card interest, it says this. One way that we do that is by what's called the unpaid balance method for finding the finance charge, and it really uses our I is pretty equation that we learned in the last video, but we have a little bit more information going on. P in this is the previous month's balance, in other words how much I still owe on the account, plus the finance charge for that month, any purchases that I made, and then I have to subtract any possible returns, such as if I bought something from Walmart and it didn't work out and I took it back, Walmart returns that money back to my credit card, and then minus any payments. Alright, the next part of this statement is that the R is the annual interest rate as normal, and this is T in this case is 1 month, or because remember in the last video I told you that T in these equations always has to be a year, we need to change 1 month into 1/12 of a year. So this is actually what we're going to be using, 1/12 of a year. Alright, so that's what's happening. Now let's go get right straight down into it. Let's talk about how this works. Alright, it says, using the unpaid balance method, find the current month's finance charge on a credit card with the following transactions. Well, I'm going to be kind of going back and forth. So the first thing it tells me to do, in order to find P, it tells me to use the previous month's balance. So that's what I'm going to do. I'm going to write that down. Last month's balance was $280. So I'm going to write that down. Okay. And then it tells me that I am going to add the previous month's finance charge. Well, what is that? Well, simply for that one, I'm going to use I is pretty again. I'm going to go 280, which is my principal, times my rate, which happens to be the 15%, so 0.15, and times my time, I'll put multiplication, and in this case it's going to be 1/12 because it's only for 1 month. Alright, and I'm going to hit enter, and I get $3.50. All right. The next thing my little equation up here tells me is it says any purchases made. All right. So do I have any purchases this up? Yep, I do. I have $631 in purchases. The next thing tells me to subtract any possible returns, which in this case is $787. So I'm going to subtract $787. And then lastly, it tells me to subtract any payments. So I'm going to subtract my payment of, let's see, I have a payment of $50. All right, cool. Now, remember, what I'm finding is my P for my I is pretty. Basically, I'm finding my principal. So I did my last month's balance. I found my previous month's interest rate. I found the how much purchases I had. I subtracted my last payment, and I subtracted any returns. So now I'm just going to plug all that stuff in the calculator. I'm going to say 280 plus 3.5 plus 631 plus 787. Sorry, let me start over. 280 plus 3.5 plus 631 minus 787 minus 50. And I find out that my P for this equation is 77.5 or $77.50. All right. So now that I know what P is, I'm going to actually find my finance charge by using I is pretty again. My principal happens to be $77.50. That's what we just calculated. My interest rate is 15%, so I'm going to put that back in. My time is only for a month, so I'm going to put 1/12. I'm going to plug all this in my calculator. $77.50 times 15% times my 1/12 or 1/12 of a year, and I get that my interest, and we're going to round this to the nearest penny this time, is only 97 cents. So my interest rate for this, or not my interest rate, but my interest, or basically my finance charge for all of this for this month is only 97 cents, and that's not too bad. And then the reason why it's not that bad is because we did a huge a huge mess of returns here. Notice that we had $631 get returned. And so we didn't actually add a lot to our account. We actually were paying some of our account back down. All right, so it wasn't too terribly bad. And to kind of prove that, notice that last month's balance was $280. Well, this, at the end of this, it was only $77. Now, I also want to show you one more thing. What we just covered, this principle, this P right here, this first part, is what we call the unpaid balance. This is a very key thing I want you to remember. Basically, think of it like this. The unpaid balance is what you owe on your next bill. Okay, not now, and the finance charge is going to be the extra interest that's going to accumulate. So basically, if you started at the end of last month with a certain bill, you new month is now your unpaid balance. So that's really what we just calculated. So this person at first last month had a balance of $280, but this month their unpaid balance was $77.50. Long story short, they went from owing $280 down to $77.50. So that kind of hopefully that shows you what's happening here. All right, let's kind of keep on trucking. Let's use this next problem. It says use the unpaid balance method. Find the finance charge on the credit card for the month of April. The starting balance is $300. The transactions for the account are shown below. Assume an annual interest rate of 25% on the account and that the billing date is April 1st. All right, so, well, this is telling me to use the unpaid balance method again. So basically, I am trying to find P, which is my unpaid balance. And to do that, it tells me I need the previous month's balance. Well, that happens to be $300. And I am going to add the previous month's finance charge. Well, what I do is I'm going to say 300 times my annual interest rate, which is 25%, times my 1/12 of a year. And I find out that I get a $6.25 finance charge for the previous month. Now I need to go look through my other stuff. It tells me to look for, I'm going to add any possible purchases. Well, this says charged. So I bought a coat, so that's a purchase. So I'm going to add $140. And I'm going to just kind of mark that off so I know I don't use it again. This tells me payment, so I'm not going to use that just yet. Here's another charge. I bought some DVDs for $28. I hope it was a good DVD. That's a lot of money for a DVD. Must have been a set. I don't know. Maybe somebody was buying The Walking Dead. All right, that'd be awesome. All right, and so we're done with that one. And the next charge was $25 for groceries. I can't even get out of Food Line for less than $25. All right, now we're done with that. So I've done all my purchases. The next thing is to look for any returns. There are no returns done for this month. The next thing is to subtract any payments. Well, I made a payment of $136, so I'm going to subtract $136. And let's find out how much our unpaid balance currently is. We're going to say $300 plus $6.25 plus $140 plus 28. I'm running out of room here. I'll slide up some. Plus 28 plus 25 minus 136. And I'm going to double check myself. 300 plus 625 plus $140 plus 28 plus 25 minus 136. And I get that my unpaid balance, this is how much I currently owe on my credit card, is $363.25. But the question wants the finance charge on this money. So I'm going to use I as pretty. I is equal to my unpaid balance, which is $363.25. And I'm going to multiply that by my rate, which is 25%. And I'm going to multiply that by my time, which is 1/12 of a year, or 1 month. So I'm going to say 365. I'm going to multiply, 363.25. And I'm going to multiply it by 25% times my 1/12. And I get that my interest rate, not my interest rate, but my finance charge, I want to say interest so bad, is going to be $7, and I'm going to round to the nearest penny, $7.57. So this is how much my finance charge is. So this is how much I have a currently unpaid balance, and this is what my credit card is, bank account or whatever, whoever my loaner is, or that I'm getting my money from, is going to add to my account later on. Okay, that's how that works. All right, now let's read this next one. A student graduates from college with $33,000 in student loans. Be honest with you, that's not too bad. I think I have about $50,000 in student loans with a 8.9% annual simple interest rate. Now, I will tell you this, that is a horrible interest rate. That is a horrible interest rate right there. I got lucky from my college loans. I think I've got about a 5.1% interest rate for mine. I think that's correct. I could be wrong, but it's a whole lot better than the 8.9. I will tell you this: if you are, when you go to pay your college loans back, your job, I'm telling you from personal experience, you may need to go shop around and get somebody to pay off your loans and give you a better interest rate than what you might have. If you've got an 8.9 or higher, you're going to get in trouble. Try to find a better way of getting some easier interest loan. All right, going back to it. Student loan graduates with college with $33,000 in student loans with an 8.9% annual simple interest rate. In order to reduce his debt quickly as possible, beginning next month, he is going to pay $800 per month towards his loan. After his first payment, how much will he own on the loan? All right, so let me explain really what this question is asking for. It is actually asking for the unpaid balance. All right. On the previous two problems, I've asked you for the finance charge for the new month. This time I'm just asking you for the unpaid balance. So how do I calculate that? Well, remember, The unpaid balance is simply this. It's the P, where we had to calculate at the very beginning. Previous month's balance plus the finance charge plus purchases made minus returns minus payments. So let's go ahead and do that. His current balance, or the previous month's balance, is $33,000. Okay? I then need to find the previous month's finance charge. So I'm going to use this 8.9%. So I'm going to say $33,000 times 8.9% times my 1 month, or my 1/12 of the year, and I get $244.75. Then after that, I need to do any purchases made. Well, that doesn't help us in this particular problem. I subtract any returns. Well, that doesn't help me in this problem. And then I subtract any payments, which does help me because I paid $800. So I want to pay $800. And we're going to find out what this gives us. So $33,000 plus my 244.75 minus my 800. And that gives me an unpaid balance of $32,444.75. Wow. I want you to look at what just happened. You would think that if a person owed $33,000 and you subtracted the 800, that person would only have $32,200 left. But look how much more he has just because of interest rates. Okay? It's very important to pay your bills down quickly as possible, but it's also extremely important to make sure that your interest rate is as low as you possibly can. So even after knocking out $800, he really only knocked out, according to this balance. So let me draw this: 33,000 minus 32,444.75 cents. He only technically paid $555.25, even though he gave his creditor $800. This is how much he really paid to get his principal down. And that's how interest works. It will eat you alive. It really will. And it's going to take you longer to get your payments down. So, all right. In this next thing that we're going to talk about, we're trying to find the finance charge by using what's called the average daily balance method. In order to do this, we need to find the outstanding balance for your account each day. And then we add all those balances. We divide by the days of the month to basically find the mean, or the average of that, what's called the average daily balance. All right. Then we use I is pretty, where P is the average daily balance that we just calculated, R is the interest rate, and T is the number of days of the month divided by 365. Now this is all a bunch of jibber jabber, so let's just go ahead and get to a problem. Alright, so it's telling me to use the average daily method and the chart below to find the finance charge for the month of August, which has 31 days. And it tells me that the annual interest rate is 18%. On July 31st, my balance was $330. But on August 8th, my charge was $75. August 12th, I made a payment for $280. August 16th, I made a charge for $181. And August 20th, I made a charge for $37. What does this all mean? Well, I've already kind of worked, you don't have to do what I'm about to show you, but I do want to just let you see this physically. I actually got a calendar for the month of August, all right? And let me zoom out just a little bit, all right? Maybe you can see this just a little bit better. Now, according to this, on July 31st, my balance was $330. That means that at the very beginning, on August 1st, my balance was $330. So, and from August 1st all the way until August 8th, all right, I should say August 7th, but let me rephrase this. August 1st, it was $330, and then August 8th, it changed. And we'll talk about that in just a second. But notice, on August 1st, the 2nd, the 3rd, the 4th, the 5th, the 6th, and the 7th, it stayed at $330 through those entire 7 days. But on August 8th, I had a charge of $75. So I added $330 plus the $175, and my balance is currently now at $405. So on August 8th, I now owe that company $405. August 9th, it's the same thing. August 10th, August 11th, and then look, August 12th. According to this, August 12th, I made a payment of $280. So on August 12th, I dropped down, and now I owe the company $125. So the 12th, the 13th, the 14th, the 15th, and then on the 16th, look what happened. The 16th, I charged $181. So I now owe the company $306. The 17th, the 18th, the 19th, and then on the 20th, what happened? The 20th, I had another charge. I owe the company an additional $37. So on the 20th, it jumps up to $343. And then it goes from the 20th, the 21st, 22nd, 23rd, 24th, 25th, 26th, 27th, 28th, 29th, 30th, and the 31st. All right, so this is what's happened. That little graph, that little chart right here is telling me all of this information. It's telling me that between the 1st and the 7th, I owe the company $330. Between the 8th and the 11th, I owe them $405. Between the 12th and the 15th, I owe them $125. Between the 16th and the 19th, I owe them $306. And then between the 20th through the 31st, I owe them $343. All right, now, that's literally your first step. Find the outstanding balance for your account each day. And then it tells me in the next step to add all those balances. Well, what I'm trying to do is to find the mean. So I would literally add up all these numbers, and then I would divide by 31. All right? But I am a lazy man. I don't want to have to go in my calculator and go 330 plus 330 plus 330 and all through all these numbers. That is a useless method. But we can simplify this. So I want to kind of go back to this. All right, and I'm going to write down here that this is what I know, that between the 1st through the 7th, which is what we found on our calculator, we owed $330. Okay? Then between the 8th and the 11th, we owe $405. Between the 12th and the 15th, we owe $125. Then between the 16th and the 19th, we owe $306. And then between the 20th through the 31st, we owe $343. All right, so these are our dates. This is the money owed. And now we're going to find another little column. And I'm going to put this as frequency. This should kind of seem familiar. I'm going to actually say that the money can represent my X. All right, so 330. How many days did I owe the company 330? Well, I owed them from 1 through 7. So that's day 1, day 2, day 3, day 4, day 5, day 6, day 7. That's 7 days that I owed $330. Look at my calendar to prove it. 1, 2, 3, 4, 5, 6, 7. All right. Now, between the 8th and the 11th, I owe $405. So how many days was that? So this is the 8th, the 9th, the 10th, the 11th. I owed that for 4 days. 4 days at $405. I can prove that with my calendar again. The 8th, the 9th, the 10th, the 11th. 1, 2, 3, 4. Between the 12th and the 15th, how many days did I owe 125? Well, I got to start at 12. 12, 13, 14, 15. That's 4 days. Let's prove it again on my calendar. What am I doing? 12th. 1, 2, 3, 4 days. Between the 16th and the 19th, I owe 306. All right, 16, 17, 18, 19, 4 days. I can prove it again. 306, 16th, 17th, 18th, 19th, 1, 2, 3, 4. And then lastly, it's $343 between the 20th and the 31st. 20, 21, 22, 23, 24, 25, 26, 27, 28, 29. That's 10 right there. 30, 31. That's 12 days. Let's prove it on the calendar. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. All right, so going back through this chart I rearranged into a new chart. It's saying that I owed the bank $330 for 7 straight days. I then owed them $405 for 4 days. Yeah, Daddy's working. I do $125 for 4 days. $306 for 4 days, and then lastly $343 for 12 days. All right, so that's what's happening in this chart. It's just an easier way of doing it from going here to here. If you like writing it all out like this so you can see it, that's fine too. I just like using the chart. Now, what I want to do is add all this information up. So what I'm going to do is I'm actually going to multiply everything across the board. So I'm going to say 330 times 7, and that gives me 2310. I'm going to do 405 times 4. That gives me 1620. I'm going to do 125 times 4. Excuse me. And that gives me 500. 306 times 4 gives me 1224. Then I'm going to go 343 times 12, and that gives me 4,116. I'm now going to take all these numbers and add them up. 2310 plus 1620 plus 500 plus 1224 plus 4116, and I got $9,770. I'm going to double check myself. 2310 plus 1620 plus 500 plus 1224 plus 4116, and I get something out plus, let's see, I got something backwards. So this is why we double check, because there's errors that happen. So I got something different that time. So I'll do it one more time. 2310 plus 1620 plus 500 plus 1224 plus 4116, and I got 9770 this time. So notice what happened there. I double checked myself and there was a mistake, so I had to triple check myself, and that's cool. So now this is what we just did. We found all the outstanding balance for your account each day, which is what we did in this section. And then it says add all those balances. So what I did is I knew that this was for 7 days, etc., and I added all my balances. Now the next step says divide by the total number of days to find the mean. Well, the total number of days is 31. So we need to divide this by 31. All right, so divide by 31. And we should get, when we do divide by 31, we get this number, 315.16 blah 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 in our calculator. Alright, and hopefully you can see this. I'm going to zoom in now. Sorry, I didn't realize I had gotten that far out. So $315.16 approximately. Now, Why did I divide by 31? Well, there should be 31 days in August. I want to show you something. These right here represented the number of days. So if we did this correctly, if I add up this entire column, I should get 31, just to prove this number is accurate. That number 31 is accurate. So 7 plus 4 is 11, plus 8 is 19, plus 12 gives me 31. So that works. Now, all right, we just did a lot of work, but we're almost done. The last thing, well, let me explain this number. This number that we got on our calculator, $315, that's our average. Basically, if I took this entire calendar and rewrote it, I can say that on average, I owed $315 every day of this month. Even though it changed up and down, on average, I owed $315. That's kind of what's happening. Now, since we're at the end, the last thing it tells me to do is use I is pretty. P is the average daily balance, R is the interest rate, and T is the number of days and months. So since this is already in my calculator, I'm going to multiply this by my interest rate, which happens to be 18%. And then I'm going to multiply it by the number of days, which is 31, divide by 365. And I want to hit enter. And that's my answer, 4.8%. Okay. This problem is probably the more complicated problem that you have on this new homework, but here's the good news. You only have 2 of them, and they're the exact same setup. There is no tricks. Now, for the sake of time, I'm not going to do another one of these because I know you can rewind this and do it multiple times. So I'm not going to do this a second one of these. However, I will tell you this. If this is hard for you to figure out what's going on in this chart, I'm telling you to use the calendar, okay? I don't like this method because it takes too long, all right? But if I added all these numbers up, you know, I'm not going to do it right now, but if I add all these numbers up, guess what I'm going to get? I'm going to get this same number. So if this chart is more confusing to you, my suggestion is for you to make a calendar. Put all the numbers in it, and then add all those numbers up and find the mean. So that's 2 ways of solving it. 1, what I think is the hard way, and 2, what I think is the easy way. Either way, you should get the exact same answer. Hopefully this helps you. If you're still struggling with average daily balance, let me know and I will help you out to the best of my ability, because this one does get confusing. And we're done. This module is now over, and the good news is we only have 1 module left after this.